This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pachortides. Thanks for joining us at XM.com. Recession worries may have ebbed somewhat this week, making way for a rebound in equities, but investors continue to be gripped by fear amid the extreme uncertainty surrounding the outlook. The policymakers are adamant that a recession can be avoided as they make the case for monetary tightening. Fed Governor Christopher Waller downplayed the risk yesterday, while James Bullard pointed out that people are mistaking a slowdown for a recession. However, there was relief on Wall Street as the two policymakers signaled they are willing to slow down the pace of rate increases later in the year, with investors finding themselves compelled to continuously revise their risk assessment for a recession, and in turn their predictions for the Fed's tightening path. There is an even greater degree of nerves for today's non-farm payrolls report out of the United States. Jobs growth likely slowed to 268,000 in June, but following the weak employment readings in the ISM PMI surveys, a miss in the headline figure is possible. Nevertheless, there was a little bit of optimism in the markets on Friday, even as Fed rate hike bets look set to finish the week stronger, and the 10-year Treasury yield is flirting with 3.0% again. The intensifying talk of a recession over the last few weeks may actually have put a floor under the sell-off in equities, at least for U.S. stocks, as Fed speculation has shifted from rate hikes to rate cuts. U.S. stock futures were last trading lower. However, the tech-heavy Nasdaq is still staring at possible weekly gains of just under 4%. Meanwhile, shares in Tokyo paired earlier sharp gains after news broke that former Japanese Prime Minister Shinzo Abe has been shot. The incident has somewhat dented the positive start to the day, boosting the safe haven yen and U.S. dollar, and underscoring how fragile sentiment is. Both the greenback and yen were firmer across the board, painting a more decidedly risk-off picture than equity markets. The euro plumbed a fresh 20-year low, coming within a whisker of parity, but it was the pound that was the worst performer. Following Prime Minister Johnson's resignation on Thursday, what started out as an end to the political uncertainty quickly turned to concerns about Britain being in a state of paralysis while the Conservative Party elects a new leader, something that could take weeks, if not months. This is today's Daily Market Comment. Thanks for joining us at XM.com.